This is Alan Bush with the Daily Financial Forecast for Thursday, March 17th. Being on the trading floor yesterday when the Fed made their announcement that they were most likely only going to raise rates 2 times this year instead of the 4 that they had predicted last December was a very exciting time on the trading floor, even though with limited numbers of traders there, it was basically pandemonium on the floor with stock indices advancing very quickly with the very dovish statement from the Fed. However, today we are seeing a little pressure developing, this due to weaker than expected corporate earnings, but the change in tone from the Fed has a very, has been a very monumental shift in the outlook. So we continue to believe that stock index futures will advance this year. In fact, we did see in the overnight trade a new high for the year in the S&P 500 futures. Now, moving over to the currencies, with the Fed statement yesterday and the comments that they are likely to raise rates much less than had been anticipated, the dollar index very quickly falling, other currencies rather quickly advancing with the change in interest rate differentials. Follow-through moves today in the same direction on the same news basically as European and Asian traders get a look at the Fed statement. So the dollar lower again today, other currencies sharply higher again today. Also, we are seeing some additional strength in the commodity currencies, the Australian dollar and the Canadian dollar, with crude oil prices advancing. However, with this news now well known around the world, I think that we are likely to see at least a partial recovery back to the upside in the dollar index, and the sharp gains that we have seen in the other currencies, that would be the pound, the yen, the Swiss franc, are likely to be given back at least to some degree. Longer term, though, we do feel that even though the Fed has become a bit less hawkish, that the Fed is still the most aggressive of all of the major central banks, and that ultimately we will find a bottom here in the dollar, and I think the dollar will then start a slow climb to and a rather I think impressive move by the end of the year to the upside in the dollar index. Now, moving over to the interest rate futures markets, gains across the board, of course, in response primarily to the Fed statement yesterday. However, we do feel that rising core inflation rates are likely to be a negative and probably offset by the slower pace of a likely series of rate increases from the Fed. So we have to remain somewhat neutral on the interest rate futures markets. Also, the probability of a rate increase at the June meeting now has slipped to 38%. Yesterday, it was 48%. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.